I think that we talked about this last time you were on the podcast. My take on it is the ESG folks have lost their minds. They're putting all these undue pressure and they don't really understand Bitcoin and mining and all of that. I think that you're trying to solve not for what I'll call personal belief and you're on some crusade, but more so from compliance says I have to do X. I got to figure out a solution so I can allocate capital to an asset that I want to allocate to. So it's very much like you're giving a box and you're trying to play within that box, right? With that said,
Pomp, I want to get detail on that. I have no choice. I have a compliance department. They have an investment committee. On top of that is a sustainability committee and the ethics committee. I don't have a choice. There's no negotiation. I got to do what they say. And that's the same for another $1 trillion worth of buying on Bitcoin. Same problem. You don't have that problem. I have that problem.
So when you think about this, the Bitcoin that ends up getting mined that meets all the milestones on this ESG kind of talk track, why are people not willing to pay more for it? I think at one point there was a thought process, and maybe we just haven't seen will they or not, but it seems like folks, they want that Bitcoin, but from an economic standpoint, I haven't seen anyone paying more for it. So one, have you seen anyone pay more for it? And then two, do you think that's something that will happen, or do you think that that's unlikely to happen in the future?
At the beginning of this journey, I thought it might happen, that there'd be some kind of wrapper on clean coin versus non-clean coin. I don't believe that anymore. I think you need fungibility across every single coin, all 21 million of them. And I think what's going to happen is for incremental buying coming in, and I'm saying $1 trillion, if my clients, just the institutional and the sovereign funds alone, and not all mine, but that whole asset class of investor, just did a 1% allocation towards just Bitcoin, that's $1 trillion worth of buying. So we really, really want to solve this problem as an industry. So it's not because you get on one side of the debate or the other. They simply can't check the box and invest until their compliance committees say yes. So all of these new mining operations, so what I think is going to happen is you got the existing coin out there now, provenance known or not known, got it. But if you're setting up a new operation to mine coin for the next 30 years, you're going to get a lot of institutional interest in that infrastructure cost. Let's say it cost you $500 million to set up in West Texas. You could probably fund that if you guaranteed those institutions that every coin awarded would go on the balance sheet, stay there, and they could claim to their compliance committees it was mined sustainably through wind and solar, which you can do in West Texas. So you got the China thing shutting down. You've got all these compliance issues in Eastern Europe. All of this stuff is happening in the background. And it started, the height of this frenzy, it was in Miami at Bitcoin 2021, when you saw that debate raging, and Elon Musk said he wouldn't take it anymore for payment on Tesla. All of that stuff was happening at the same time. Issue hasn't gone away. On the other hand, I see it as a huge upside potential to solve the problem. I want to be long Bitcoin when that 1% gets allocated to the rest of the funds, because that's when you're going to see really amazing incremental valuations.
So today we're sitting around $45,000, $46,000. When that $1 trillion gets allocated, any thoughts in terms of what happens to Bitcoin?
Katie, bar the doors, Pomp. It depends how fast they come in. That's when you get extreme extension of valuation. You just don't know. Anytime people say, I know the ceiling on the price of Bitcoin, they have no idea. It could go anywhere. And it's just because it depends. And here's really when I talk to institutions, there's a change in philosophy about their thinking on, let's just stay with Bitcoin. Bitcoin used to be considered for many institutions that hadn't owned it yet, the ones that were just looking at it, as a currency. They're not thinking that way anymore. They're looking at it as a property. So you would buy it in the same way as a AAA office tower in Manhattan. You buy an allocation to coin that you're allowed to own. You never trade it. You own it as an asset. You know it's compliant. It checks the box. You own it on your balance sheet, your provenance, and it's something that you can own as property. And that's where I think we're going. Some percentage will still be traded, but for the big institutions coming in, this is an asset class that is a property.
I think I just heard Kevin O'Leary say that Bitcoin's price is unlimited. That's what I think I heard, but who knows? In terms of public companies putting it on their balance sheet, we know MicroStrategy, Tesla, Square. We also know a number of the Bitcoin or kind of crypto-focused companies in the public market have done this as well. Is that something where you expect over the next year or two, more and more publicly traded companies will start to put this on the balance sheet? Or are you thinking more exclusively this stays in kind of the investment organization corner of the financial market for now?
I'll tell you pragmatically what it's going to take to get the S&P 500 putting an allocation to their treasury and their balance sheets, because they are interested in starting to explore crypto in exchange for cash reserves, and we'll go into that in a second on USDC. Okay, but let's just stay on Bitcoin. That letter that Larry Fink puts out every quarter that dictates BlackRock's positioning for sustainability. We got to solve for that. We got to get Larry on board for Bitcoin on a sustainability model. And if he's okay with it, because that letter actually sets policy for both, think about the way this works, for sovereign funds, who he's the largest asset manager in the world, and for domestic pension plans, and for universities and everybody else. He started this a few years ago with the sustainability issue. And all of a sudden you saw the market capitalization of hydrocarbons like oil companies start to get crushed. Because if you're an institution, and let's say you've got, $5 billion under management of BlackRock, and Larry's telling you, look, we're not investing in hydrocarbon distribution companies anymore, whatever his edict is, they're going to be selling those. And so what we need is I'm calling out for the guy that really sets the standard. It's Larry Fink in that letter and his ESG committee and the consultants he uses. We got to get them on board. And if he said, look, you want to own Bitcoin? This is how you can own it and still fit the metrics around global sustainability. That's where we're at. Now, I've taken it upon myself because I'm not ready yet. I want to go there and see his team and say, look, I'm going to bring a bunch of representatives from the mining community. We got to talk. I mean, I want to be an investor in mining. I don't want to be offside on compliance. I don't want to be offside on ESG. I can't. I don't have that option. I can't go against that mandate. So I'd rather get them on board.
What happens if you and I go see Larry Fink at BlackRock? You've got your nice suit on and your expensive watch, and I show up dressed like this. Do you think that he takes the meeting?
I think he takes the meeting. I think Larry's a pretty pragmatic guy. I work in the institutional world. You know that, Pomp. That's where I am every day. And so, I'm sure that, and I think probably, and I'm just speculating now because I haven't done my due diligence yet, but I'm going to guess that inside of his organization, there is a sustainability committee that's setting up these mandates and help publishing that quarterly letter. But you got to understand something, Pomp. That letter it is actually policy. That's what that is. It's not officially policy, but every institution reads that letter. The institutional committees read that letter on sustainability, and they try and abide by it because Larry's a pragmatic guy. That's where we're at in the mining community right now. We gotta solve this. You want to see Bitcoin at $1 million a coin? You got to solve this.
Is Larry Fink, in your opinion, the most important person in terms of getting institutional capital to flow into the market? If Larry Fink kind of capitulated, put together this framework and said, okay, here's how to do it, do you think that would be the inflection point?
He is the most influential. Why? Because numbers don't lie. He's the #1 asset manager on earth. Every geography works with him all around the world. And so look, I'm just calling it what it is. He's the big dog, and he's put those sustainability mandates out there. And every industry, you should talk to the guys in oil and gas. They're not exactly happy.